All right, traders, welcome to today's end of day recap. This is Christian Farmer at Star Market Trade Group, and it is Thursday, April 4th. So first public video of the week. As a reminder, I do end of day videos, but they are mainly for members where we go over watch lists and ongoing trades and more in-depth analysis. Public videos, I want to basically just talk about today, of course, like what happened with today's reversal and what to kind of how to kind of think about this going forward. Risk disclaimer in front of you: everything that we're going through is for information purposes only, not giving any advice or recommendations. Everything that we're going through today is for information purposes only. So very fast markets, right? I mean, if you I always kind of give this a little bit of thought or overall picture, because we are dealing with markets that move very quickly. Sometimes you could tweet out a trade idea in the morning, and obviously if the overall market changes, then it's really going to kind of change the overall thesis for that. And it's the speed of which things occur too. It's not so much like hey, this happens over the course of a couple days. I mean, I guess you could argue that we started to see a little bit of cracks in the beginning of the week, but it will come fast at you, and that's basically what you could what happened today. And it's important. What I try to do in my trading and what I've learned in my trading over the years. I've basically moved to be a trend trader like over the last 5 years, and realizing that really no one knows what's going to happen on a day-to-day basis. Of course, we can look for clues and we can look for trade ideas and so forth to get a little bit of a trading edge. But for the most part, no one really knows what's going to happen on a day-to-day basis. What we try to do is stick with trends for as long as they last, and then make adjustments when the trends begin to break or change. So that kind of brings us to exactly where we are right now. So let's look at first the S&P indices, and then we'll kind of come back and talk about some of the things to kind of watch going forward. But here we are. Right. And this is what I'm referring to. Like, we've been in this trend, right? For basically, we started to really reverse, obviously, and I'm not going to rehash all of this, but we know that we've been going in this uptrend channel since I've got it drawn, when we really kind of got into this. And maybe I could have even drawn it back here, but it doesn't really matter how long. But let's just say for the beginning of this year, since I drew this channel. So one of the so the object of the game is to stay in trades for as long as the trajectory is up, right? Because the more that you're in on the right side of the market, the more that you're going to make money being on the right side of the market. Now, when things change, what we want to do is take note. And you'll notice in a lot of a lot of the notes that I send out, I'm always detailing levels to watch. I think that sometimes we can find these levels too a little bit sooner on the 1 hour chart, right? Because it's just a little bit of a short-term view, and we know when we begin to kind of break a trend. And we did, if we go back to where we were earlier in the week, we kind of came in here and started to move downside, right? And we took out some downside levels and we started to rebound a little bit. And even this afternoon, it looked like we were, but one of my jokes was um to basically, like, it was a little bit of a curb your enthusiasm reference, because we were only just moving back to where we were earlier in the week, right? And even we didn't get back to those highs. And I said, well, as long as we stay above 52.9750, right, then the trend is our friend, and we're continuing in this direction. But clearly there was a change of tone here, and look at the volume kind of basically confirming that move that we saw, and which is a move to the downside, right? So we've got the picture, clear here of where we first broke, right? And notice that we're now below these levels. Next downside level I would watch is 51.42. But ultimately, now that we've broken into the daily value area, which you could see on the daily chart, right? Or excuse me, the monthly value area, right? Now, so that's a change in tone. And I can't tell you like exactly where we're going to go down to, but it's a change in tone on decent volume. And I would think maybe we might see, a test of the bottom of value, which is 50, 51, 57. and also the 50-day moving average, right? And then the best thing to, so, again, what does this picture tell us? We've broken the short-term 5-period moving average, which we're kind of going back and forth with, and the 20-day moving average. So for me, that's a change in tone. And if you're following along here, and if you've been a trend trader and following this trend, then you should have at some point, for the most part, been making money on this whole trip, right? Even if this got a little bit more difficult over the last week and a half, because I do view that it got more difficult. Every day we were dealing with gaps up into the open, and then really no follow through for the rest of the session, and even some selling pressure, right? And even that was the case yesterday too. We really didn't go that far. We just had a nice bounce from pre-market levels, right? And this is something that I stated earlier on Twitter. I said, so this was like in the first hour of the trading session. I said, important to be a seller into these gaps, into these gaps ups, and then let the market come to you, because that's more often than what we've been seeing, and that's generally how the market does act, is that the majority of the gains are made in the overnight market, so buying the close and selling the open, but it got more dramatic in the last week and a half. So, I've been advocating that a lot, and the first 15 minutes of the day, 20 minutes of the day, I was looking for things to basically, areas or names that I was watching. For instance, I was watching a CrowdStrike, right? And I was watching Uber, and I was watching a couple other names that were on my watch list. And I'm like, huh, these names don't look very strong. So I basically just, I sold this morning. I took profits in some things, and I did unwind. I was in a long position of Micron, and I was in a long position of SMH, and I sold those because those are my buy the dip trades, and so I got a little bit lucky with those. I don't know if lucky is the right word, but just being a risk manager, right, and knowing that, hey, you got a nice trade over the last couple of days, don't get greedy. Let's watch and pay attention to what happens, right? And we started to see that, I got some trade signals, and watching some option flow, and there was some call buying in NTNX, for example, which looked like it was going to break the value area 65.13, but it got rejected. Right. So what did I do with that trade? I unwound the trade. Right. So you could kind of see what I did today. Again, taking those targets in Micron's SMH. I did add back because I sold at 130. I added back that target at 128, and you could see right down in here, somewhere in here, I did decide to bail on this trade and actually get out of Micron altogether. So that was at 11 o'clock. Right. We don't always know the direction of how things are going to unfold for the day. Right. And then you could see that I got out of my last SMH trade. I got a nice target here at 129.50, trailing stop at 127, and exited the balance of the trade. So this worked quite well. I did add, we saw a big call buyer in Generac, and I mentioned we saw some call positions, but ultimately these were two starter positions for me. And as we unfolded, right, and I even tried to buy the dip a little bit, because I didn't think that we were going to completely break down like this, and you don't know until you really start to kind of move to the downside. And unfortunately, this trade was a loss for me. Again, I show winners and losers obviously in the room, and trade management is oh so important, right? And so basically, as the day kind of unfolded, I got out of as we got closer to the end of the day, and the day revealed itself for a decent reversal day. I did get out of that NTNX. You could see that's was not for a gain, it's for a loss. I also got out of a Goldman Sachs starter position that I put on last week, as the financials were doing fairly well. So that one's also off the books. But so why am I showing you all of these trades and the details behind here? Because this is what it takes, like, to be like a risk manager and a trader over time. It's not so much like rah rah rah, every day we're going to make money. You have to make adjustments to what the market is telling you to do. Now, again, like, I don't always cover all the winners too. NTR was a nice winner. Surprisingly, I don't know why CF went up. Other than the agriculture space has been getting a little bit better, right? That was one of the trade ideas that I thought that we might see the agriculture names kind of catch a little bit, considering how many other areas, commodities oil, gold, copper, right? So it just felt like agriculture and some of the agriculture commodities might be next on the list. So both of those trades worked quite well, and I still have on a portion of NTR and of the CF after taking a couple quick targets today. So let's talk about so speaking of risk management, I went over the S&P and some levels to watch. You can kind of see the same thing here for the Qs, and we know that the Qs were a little bit weaker because the S&P has been above the value area, and the Qs try to get back above today, and they got rejected, unfortunately. So we do have a jobs report tomorrow, which can certainly change the tone. But in my opinion, I've said this a couple times to traders, is that when you have an event coming up, whether it's a jobs report, whether it's a Fed meeting, I'm always worried about the downside risk, right? I really like, one of my favorite like market wizards traders to pay attention to or to listen to was Paul Tudor Jones, right? He's always worried about the downside, always thinking about what positions he has on, thinking about what could go wrong with those positions, right? Of course, we all want to make money, but this is a game of risk, right? And understanding that when you've got money in the game, you want to be careful about what events are coming. And tomorrow's jobs report is it's another event. We don't know what the jobs number is going to be, right? Unless you're some type of super, economic analyst where you're crunching the jobs numbers all over the country, right? That's not what we do, right? We just take note of when we have something that could really kind of change the tone a little bit. All right, so there's the cues, and again, risk comes out. Things can change very quickly. You've got to stay nimble. You've got to be on your toes with this market. And we got to the top of value, and again, I didn't. I tweeted this out earlier. I said, hey, I don't know if we're going to be able to get through this top of value. We did barely, and that's called a rejection, and it's met with a rejection of selling. Also with IWM. Right, let's back out and look at the daily chart. We know IWM has been a rougher trade when we're talking about the trend. That first picture that I showed you of the chart of the S&P has been in a nice up channel. While there is an upward trajectory towards small caps, they've kind of been all over the place. And getting a rejection there last week, falling down, getting back to the top of the value area for the month. Again, in this value area, you could see the market profile behind it, right? It's based on all of the last period, which is last month's activity, and you could see that we got rejected right where it was necessary to turn the corner. All right, so unfortunately, you make adjustments to this stuff, and you understand that like one day isn't a trend, right? With in terms of making money, right? If you lost money today, okay, that's going to happen from time to time. You can't avoid that, right? In trading. And the goal is to have many more days where you're making money, right? And understand that you may have one day here and there where you're going to get thumped a little bit, right? Not that today was a horrible event for me, but today I was making nice money and I had some things reverse on me and I took one bad trade at the end of the day. But that's all in the process of things, right? Don't get, in my opinion, and again, I'm not giving out advice, but don't get overly concerned when you have a bad day. What you really want to avoid is bad weeks and really a bad month, right? So don't let, that's why we're constantly watching and making adjustments as this market is signaling for us to do so. Now, I got some questions because I talk a lot about the relationship between bonds and small caps, right? And if you look at what happened today at the end of the day, right, TLT started to kind of move up a little bit. But you have to understand, like, this is just one piece of the puzzle, right? I understand, like, retail traders, they like rules. They like when somebody tells them, hey, when this goes up, this should go up, or when this goes up, that goes down, right? And they tend to put that in their brain and think like that's going to be the situation every time. But you have to understand how bonds work. Bonds can also work as a flight to safety, right? And if you don't believe me, right, I like to give examples of when things transpired. But you could take, for example, we'll go back 5 years here in the TLT chart, right? So that you understand that it doesn't mean just when bonds are up, I want to be buying small caps, right? You have to kind of put the whole context of what's happening together. So take, for example, what happened. during COVID times, right? Why did bonds act like this, right? They went up like crazy. Well, because it becomes a flight to safety, right? And other things are going down, like obviously all the equities got crushed, right? Because those are higher risk, right? So bonds can be many things. And when the VIX, when volatility starts to rise, right, then all of a sudden bonds can become a flight to safety, right? Because they are insured by the government, right? Stocks are not insured by anybody, right? Bonds have the full faith and credit of the United States. Now you could argue with higher deficits and so forth, that may eventually change, but that's a whole nother topic. And for now, the credit agencies still have our bonds rated as the highest out there. So I don't want to get into that situation, but just to understand that when volatility starts to pick up, and we could look at what the VIX did today, right? That bonds will begin to act as more of a flight to safety, right? And here we are with the VIX. I'm just going to switch this over to 1 year, right? And you could see, the last, I covered this, and I covered this the other day, and it's basically saying, or I think I went over this in the pre-market session, saying, hey, sometimes we have these bout of volatility, right? And then automatically, like you see these long wicks to the candles, and it usually means that volatility is temporary when you see the long wicks, right? Like we saw a little bit earlier this week, right, with this candle. However, today's candle looks a little bit different, right? So, volatility can kind of come at you more than for one day or more than a couple days, right? Let's see what the VVIX looks like too, which I didn't get a chance to actually look at today. Right. Yeah. And the VVIX also closed close to the highs of the session. So things could change tomorrow, right? I don't have a crystal ball and can't tell you what the jobs report is going to do tomorrow for the market. We know that more bad news has been essentially good news because, bad news in terms of if you start to see these economics get a little bit worse, that probably means that inflation is going to start heading down a little bit, right? That's why you're getting that reaction. So for example, earlier in the week, if we go back to the first, right, when we saw the ISM, which ISM is a leading indicator, right, and ISM manufacturing was high, came out higher than expected, the dollar, shot higher, right? Because that's a surefire indication that inflation, or it could translate, I should say, so that inflation could be sticking around. Now, of course, yesterday, right, the ISM services number came in a little bit lighter than expected, 51 versus 52.8, right? And the market liked that number, right? Because again, it goes back to those um, inflation's expectations. Right. And of course, today we had 7 Fed speakers. Some of them are dovish, some of them are hawkish. Right. I do think what matters is what Powell says. It kind of takes precedence. However, they are doing their job in terms of communicating things too. Should Powell have been, you can argue Powell should have been more hawkish the last couple times that he's spoken, because we're not really seeing any, in my opinion, and again, you could take my opinion for what it's worth, but we're not seeing inflation really come down that much. We've seen the last 2 CPI reports that are hot. Okay, the PCE deflator number came in on Friday when we were closed, and it wasn't as bad as the CPI report, but it's still indicating that inflation is higher. And also, we're seeing what's going on with crude, copper, and all the other commodities that are moving higher, which is not telling me that inflation is coming down. So this is going to be a work in progress, right? So for the most part, all of that stuff that I just covered in the last few minutes about Fed speakers and economic reports, the best thing to do, in my opinion, is to understand when price is telling you something, right? And we'll go back to this S&P chart. This is all that you really need to know, in my opinion, to make some adjustments. We don't know what Powell's going to do. We don't know what inflation is going to do 3, 4 months from now. But, the markets are forward looking. And this to me is a change in tone. And that's all it is. And when I see a change in tone, I take action. And that's basically what I did. Now, is this the end of the world that we're breaking this channel? Well, we weren't going to stay in this thing forever, right? Let's be reasonable. And we've had one heck of a run, without any major volatility. So in my opinion, let this play out a little bit. Let it get the bullish sentiment removed from the market a little bit, right? And then there will be buying opportunities, right? The other thing to realize too is today's the 4th of April, right? Once we kind of get past this jobs report and a little bit less of the macro, we're going to get more into the micro, right? Because we're going to have earning season. Right. So that's going to dictate moves too. We also don't know what these big companies and how they're going to report earnings. So that's going to take precedence too once we get there. All right. A couple other things that I thought were some warning signals over the last couple. And again, you don't know how the warning signals are going to materialize. Like, for Costco was trying to come back today, but this is a change in tone. And sometimes you begin to see before the overall market turns down, you start to see things like this, right? Costco, which has been one of the market leaders, is now breaking down. Right? It's breaking below its 50-day moving average, something that it hadn't done in a while. Now, I know not everybody views Visa the same way as I do, because it's not the same thing as a Meta or as a Google to trade, which I know people love to trade those names. Visa is a harder name to trade, but it's telling me something. Visa, one of the biggest credit card companies out there, is starting to break down, right? It broke the 50, again, anything that's been in this sustained trend above its 20-day moving average, above the 50-day moving average, once it begins to break down like this, it's telling you something is changing in the marketplace, right? So for now, we've got some changes, and I'm just reviewing a couple charts here. I'm keeping it simple, but this should be enough to tell you, hey, let's pump the brakes on risk taking. And I've been trying to basically, as the trend over the last couple of months has persisted, I've been long a number of positions in my swing trading account. And as we've been kind of getting more, things have gotten a little bit more turbulent. I've been reducing risk, and I've been playing more of the commodity trades, and so on and so forth, and that's worked well. So now, it's okay. Like, reading the tea leaves of going through the technicals and so forth. Right now, I think it's time to be a little bit more cautious. And I've taken down my risk today. Still have a couple of positions on, but much less risk than if the market ended on the highs today. All right. So again, it comes at you fast. You've got to make adjustments quickly. But overall, take a deep breath and understand that the market changes like this, and this is quite normal, for us to get some volatility into the market. It's just that we haven't seen it for a while. All right, guys, have a great night. See you tomorrow.